Do tell. Hello, Kate. Me and you, huh?
I see you got your guitar.
Oh, yes, yes, yes. I did. How's that sound? Oh, not good. I I'm glad that it wasn't me with the meeting. You know, I have no credibility when it comes to the meetings. I did get that off. Okay, here comes Fiona. So there we go. So people apparently are checking in.
Yeah,
Okay,
yeah.
that's great. I'm so sorry.
I thought I was gonna have you all to myself.
Ah, yeah, that'd have been your lucky day, huh?
For
Hi,
sure.
Fiona. How you doing?
Hi, good. How are you?
Hi, George. Did you get the sad news about the extra credit in chapter 4?
Which one?
We put the right chapter 4 extra credit up finally.
I was trying to look for it. Let me see.
It should be there now.
Let me see. Syllabus.
Oh, so there is a chapter 4 extra credit?
Yeah, yeah. Cornelia got an email out yesterday.
I don't see it.
Go into the module, chapter 4.
Yeah.
You don't see it?
Let me see. Chapter 4. Chapter 4.
Hi, Callie.
Nope. Under the module, it just shows week 2, chapter 4. There's the chapter 4 material, the summary, the exercises, the learning smart, and the quiz.
Okay, I'll get back to the boss. I'm enjoying. She's the one who's supposed to put those up there, so I'm enjoying. I'm enjoying her mishap here a little bit. Okay. You were learning enough to look for my email. I don't know what happened with the Zoom meeting. I thought we could do two things, if you like. Go into chapter 5, which will not be. I don't think it'll be a significant part of the test, but it is kind of important in a few areas. And then what I've got racked up is a test I gave my 230 class last year, and I thought we might go over that and prove helpful. Okay. So I guess we're ready to start 11 minutes late. And let me see if I can share, huh? Hold on. Do we see the slideshow? Yes or no? Okay, I hear nothing, but I see heads nodding. Okay. Ah. All right. Okay. Chapter 5 is going to talk about the structure of a corporation. And in this chapter, I think the best way to prepare for the test would be not memorize, but understand the terms in the back of the chapter. It gets into some metrics, some calculations, but those are more along the line of what we'll do with the financial standard analysis, the FSA. So let's get started and see what they're talking about. In looking at these slides, they're very busy, and it gives me the impression they were put together rather quickly, but that's just me. Okay, preparation of financial statements, huh? Who puts them together? The chief financial officer and the chief executive officer, and you, the accounting staff, using GAAP, okay? You prepare statements, and then they're verified by independent auditors. Independent auditors, meaning they don't work for the company. That might sound silly, but in the old days, you could check your own work. And then they go through their different pieces here. Who gets this information? Who gets it? Government under regulations, SEC members. Let me back up here. I'm babbling a little bit. What the heck is this? Information intermediate financial analysis. This is what you get out of the financial statements. Governor, regulators are interested. Let me get to the users, huh? Regulators, the SEC, that's something you should know. The Security and Exchange Commission started in 1933 under the great President Franklin Roosevelt to monitor the stock market. They gave the responsibility for what has to go into the financial statements to the Financial Accounting Standards Board, FASB. You should know that one. This one here, I don't think we should worry about. The PCA will be about auditing. I guess we know what a stock exchange is, huh? That's the listing of all the stocks and where you trade them. Who is responsible? Management, huh? Management is ultimately responsible. And they're repeating. I didn't go backwards, believe me, they repeated that. Annual reports, huh? On the annual report, and this is the annual report, the 10K as well. The annual report is what you're going to be using for your FSA. You're going to go in there and dig out the information you need. And it consists of the 4 statements. We know what they are: the income statement, the equity statement, and the balance sheet, and the cash flow statement. And the footnotes are super important. Every single line in that financial statement is probably going to have a note. Cash, they'll explain how much of their cash is in the form of a savings account or a checking account, how much is in the form of a short-term CD. Accounts receivable, they'll talk about their experience collecting. Notes are very useful. And most importantly, at the end of the report will be the report of the independent auditors. You want to get what's called an unqualified opinion. When I took the CPA exam, I kind of had it memorized. The language was the same. I don't quite memorize it now, but it's along the lines of, we have examined the SBCC books, and we find, based on our normal practices and standards, that is in line with GAAP, blah, 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 and therefore unqualified. Annual reports. They must prepare not only annual reports, but quarterly reports. The annual report is called the 10K. The quarterly is the 8K. All right, we're going to be working with the 10K. And it has a lot more than the company's annual report. The annual, when I say annual report, it's a publication by the company. And a lot of it is puffery and advertising, but it does include all the financial statements. The 10K is much more rigorous. It has tons and tons of information. And there's all kinds of minimum disclosures and a lot of non-financial information. Here we go, the annual reports. We just went over this, statements, notes. The 10K and the annual report will talk about the stock price, huh? They'll want you to know what the stock has been doing. It's going to have some summaries. And this is always interesting to me, the list of the directors and officers of the company and their addresses, believe it or not. I'm going to say that's not their home address, but you can get a hold of them fairly quickly. And you might find this interesting. I'm going to tell you briefly about a pair of brothers. My goodness, I always forget their names. They were 2 successful investors, and they retired. They were far from millionaires, but they did well enough. And their hobby became buying 1 share of stock in many, many different companies on the Dow Jones. And because they owned 1 share of stock, they had the same right as somebody who owned 1 million shares to ask questions at the annual stockholders meeting in person. And they became like celebrities, these 2 guys. And they would get up and they would get the first question. The first thing they would say to Coca-Cola would be something like, "That soda you make now stinks. You guys got to wake up." And the point is, they had that ability with just that 1 share of stock. I'll email you an article about those 2 guys. They were hilarious, but they were also serious. I mean, they got this discussion going, huh? Quarterly reports. These are your 8Ks. And again, you're going to have a letter. Companies don't do their own quarterly report with the advertising. And here it's interesting, they omit the cash flow statement and statement of equity. So I'm not sure how useful they would be without that. The auditors are independent. They follow the accounting standards as set up by the Financial Accounting Standard Board. An unqualified opinion. Let me you can't see what I'm doing, but this thing is in my way. Get lost. There we go. An unqualified or clean opinion states the financial statements are fair presentations in all material respects in conformity to GAP. Now, I think it was Katie asked me, does that mean that the statements are correct? It does not really. No. if enough people want to commit fraud, they can do it and get away with it for a while. The information you get from the management team, you have to at first assume it's reasonably correct, but then you go through your different tests and measurements, and if they don't clear things up, that is not the fault of the auditor. In other words, if the company says we have $1 million in the bank and they give you the name of the bank and you call the bank and they confirm we have $1 million and you send a letter to the bank, could you audit, could you attest that they have $1 million? If everyone's in cahoots, there's not much the auditors are going to be able to do. 10K, 10Q, 10Q to 8K. Okay, 10K, that's the one that we're going to be working with, all right? 10Q, 8K. And for some reason, they're showing us a consolidated balance sheet, huh? Callaway Golf. Consolidated balance sheet means that they've combined all of the different business entities involved with Callaway Golf Company. Perhaps they have a Callaway Golf production company, Callaway Golf course company, and they just combine all of their items into this financial statement. Callaway, they make wonderful golf clubs for those of you who play, right? And they're showing you the current assets, meaning we're going to chew them up in 30 days, right? Current assets, property, equipment, other assets. Other assets would probably be other intangibles. Here's the other side of it. 845,947 total assets. That will be the total stockholders' equity and liabilities here. So this is nothing onerous. You've seen that. And here's the final. Now, when you start doing some problems, well, we're probably past that point now, but when you get into the chapter on the stock and even on the test, this section of equity will be laid out with the par value of the stock, how much was authorized, how much was issued, outstanding, etc. Now, this is an interesting thing. Again, not a big part of the test, but okay. Income statements have 3 sections. I'm going to call the continuing operation section the continuing operation, okay? Company, again, I go to my favorite company, Coca-Cola. They produce soda, they market soda, they sell soda, and in so doing, they have to buy things from vendors. They have to pay their salesmen. They have to have gas for the trucks to deliver things. Those are all part of the operation, operating net income. Non-recurring items are things that come after operating income to get down to final net income. And they're talking about 2 things here, discontinued operations and extraordinary items. And extraordinary items have a particular meaning in the world of accounting, earnings per share. Let's look at the template here. And I need to move you guys over here. Hold on. Okay. I couldn't see the right side of the screen. I was wondering if the numbers. Okay. Net sales minus cost of goods sold equals gross profit. The operating expenses are all those normal expenses used to produce sodas to sell it. Then they have non-operating gains and losses. Discontinued item, a discontinued entity, let's see what they call it, discontinued operation. Let me say it this way, Coca-Cola has all kinds of bottling plants around the world. If they decide that they're going to shut down a big bottling center somewhere, that's a significant item that needs to be isolated as a discontinued operation. You have to show the loss from setting that, from letting that place go down in ashes, okay? Discontinued operation. There could be other extraordinary things. Force majeure. Your factory is badly damaged in a fire. That would be a cost beyond the insurance that goes, what we say, below the line. Income from operations, less your non-operating, and non-operating can also include your interest income and interest expense, okay? So that's a format. Companies have these recurring and non-recurring. they're not useful in terms of the analysis. Really not. Suppose Coca-Cola shut down a couple of major factories, and they did it because it was an old-fashioned, slow-moving, unproductive unit. They shut it down that year. Well, yeah, they're going to show a big loss in doing that. But if you move that up into the operating area, it might offset what was otherwise a very good operating year and confuse everybody. And that's why it is separated. And there's our format. This will be part of your FSA coming up, not in the first one, but we're going to look at some different metrics. And again, we're going to go through these with the FSA. I hope Cornelia tests you all on just about all of these. They're all useful, meaningful. Earnings per share. You've probably heard that expression, right, George? Earnings per share. You know, you turn on, if you're flipping the channels on the news and you happen to come to the business section, you might hear the guy say, well, Microsoft today announced earnings of $2 per share. Net income divided by the outstanding shares. Average number of outstanding shares. It's simply the shares at the beginning of the year, outstanding at the end of the year, divided by 2. Earnings per share. This is one of the first things that investors love to look at. And they're making a crackdown here about preferred dividends. Don't worry about that. That's coming up in about 6 more chapters, okay? Here, I guess, is a consolidated income statement. Notice that little arrow off to the right. Your net sales, and let me repeat that word, net sales. Next chapter is all about net sales. The net sales is 100%. Everything below that net sales line is expressed as a percentage of the net sales. For example, $36,000 in cost of goods sold divided by 69,800 equals 51.58. 16 divided by 69. I'm sure you get the feel there. The reason I'm spending a little extra time on this is what I just did for you is your first FSA. You're going to lay out the template that Cornelia and I will provide, and she's making the decision when to give it to you. I have a feeling she may be waiting after the first test. I don't know. But you're going to get this information here in blank form. You're going to go to your Kellogg's and General Mills, and you're going to drop the appropriate numbers in and come up with these percentages. That is the part of the FSA that's called the component percentage, okay? So that's not so tough. Understand that 100% net sales, your expenses came to a total of 89.68%. Subtract that from 100, you get 10.32. Subtract these oddball guys here, and those are actually gains that got you up to net income before taxes of 15.96. That's the component percentage. I'm now going to take an extra moment to show you the second part of the FSA. You're going to be asked to compare these two numbers and express the difference as a percentage before you comment on it. And I'm just going to say this. Current year divided by prior year minus 1. Remember we heard that. Current year minus prior year divided by 1 will give you the percentage. And I'm just going to throw that out there. The statement of cash flows, again, we're not going to ask you to do the statement of cash flows. The statement of cash flows is actually a very tricky thing to put together. And that's why we have an entire chapter on it. You need to know the cash flows, operating from what the business does, investing. They either bought stock in another company or they bought a whole big bunch of equipment, fixed assets, or they're borrowing money somehow by issuing stock or borrowing, okay? We will examine the indirect method of preparing. I'm not sure if I even want to show this because, I'm deliberately going to skip this for a second here. Forgive me for doing that, but I'm going to talk with Cornelia. And the reason is, Nobody uses the direct method of cash flow analysis. It's just a quick photograph of the cash activity in the general ledger. It's the indirect one that's the subject of chapter 12. So I'll bring that up with Cornelia. And I have to move stuff around. I'm always moving things, huh? Counting rules applied. Okay. They're just giving you now some examples of notes. One of the first notes is usually the statement of accounting policies. Here's one for property and equipment. What are they telling you? Property, plant, and equipment are stated at cost. Well, they have to be. We know that. They're just telling you that. Less accumulated depreciation to give you the net book value. And now they're showing you the different methods or time frames they're using to calculate depreciation. Buildings go over 10 to 30 years, machinery 5 to 15, etc. You bought a building here, and you hope that building lasts 30 years or more. And you pay $2 million for that building. And you're looking at the year end, and you see that you made a profit of about $2 million. Can you decide to depreciate that building for just 1 year and pick up $200,000 of depreciation expense and wipe out taxes on $2 million? The answer is, of course not. These numbers have to be reasonable, systematic, and rational. Companies, I guess, do play with them. You know, they buy computer equipment, and they make the argument that computers go out of whack, go out of favor quickly, so we'll depreciate in 2 years. You might be able to do something like that, but not with a car or a big guy. And then they have other notes called the segment information. Segment information. When you get into 240, you'll do segments. Segment means a piece of the business, huh? A segment. Coca-Cola has a segment, and I'm going to pretend this is Coca-Cola. I don't know what company it is, but what they're telling you is they sell this amount of soda. They sold $500 million in soda in the United States, that much in Europe, etc. It's a segment. It could be the states of the United States. It could be a demographic that says we sell soda to people from 10 to 19 in this amount, 20 to 30. Segment information can be pretty darn useful. Give me 1 second here. Relevant information not disclosed. The final carry impacts the financial statement that is not shown. This could be about lawsuits. Let's see what they're talking about here. The final category includes information that impacts the company financially, but is not shown on the statement. And then they don't go into any details. I'll talk about that a little bit, though. Again, this is going to be part of a chapter coming up. If you're sued by a company, $1 million, huh? You have to make an honest assessment on whether you're liable to lose that lawsuit. And if you think you are going to lose the lawsuit, you would have to disclose it. If you're not sure, you have to put a note up. And if it's a frivolous stupid lawsuit that you know you're not going to lose, you don't have to do anything. So that's kind of an example of the information that can come through would not show up necessarily. Another metric, this again will be coming up on your second or third financial statement analysis. This one here measures return on assets, return meaning income divided by total assets. And we're looking at a percentage here, 2.9, 6.5. Wow, what's happening to Callaway? They've really done great, huh? They doubled here and then they went up again. What they're saying here is that Callaway has, how do I want to say this? Callaway has 3 cents worth of fixed assets left over after they cover their income. So they're getting some positive use out of their fixed assets. Now, this is a little complicated. I don't think that's why I don't like this chapter. It's filled with things that are rather extraneous for you guys on the test, but let's go over it. Return on assets equals the net profit margin that we just looked at. Net profit margin That's your income divided by the sales, the asset turnover, which we just peeked at, which is the net income over your total assets. You take those two calculations, multiply them, and that becomes your return on investment. And when you get into 240, which is the kind of work that I did all my life, I think you'll find that part interesting. When you find managers who argue, well, my company, my division had a tremendous net income, so I should get a big bonus. And this guy says, well, I didn't have such a good bonus, but boy, I got a tremendous return on our assets. And that fight goes on all the time. Wow, profit drivers. I don't think this will be on your test. I worked a lot with profit drivers. This is more in the area of manufacturing. Profit drivers. A profit driver would be an activity the company undergoes to increase their product. Advertising could be a profit driver, huh? Getting some celebrity on board to talk about it. Low-cost strategy, rely on efficient management to produce high asset turnovers. Chapter supplement, non-recurring items. I'm just going to take a quick look at this. Well, let's look at this because they finally do give us a little bit of detail on what we briefly mentioned. Here is your net income after non-recurring. And they're showing you the abandonment of a segment of a business or the gain or loss on a disposal of a segment. You could actually make money getting rid of a segment. Coca-Cola has that $2 million, has that old building there. They sold that building at a tremendous loss. They lost $2 million, but now they're able to sell the land underneath it for big, big money. So you'd end up with a gain in that kind of disclosure. Extraordinary items simply means anything below operating. Extraordinary items. And let's see what we got here. I need to do another move here. Recording extruding beam. Like Popeye voice. Okay. Operating revenues. They're just showing you down here the income from discontinued operations. Okay. Uh-oh, what did I do there? Oh my goodness. That's pretty much this chapter. I don't think it's going to be a big part of the test. I make this promise. Hey, how we doing there, pal? Good to see you. Is that your brother, Kelly? Kelly's not talking.
My son.
Oh, your son?
Yeah.
Oh, right. Yeah, well, tell him welcome aboard. Glad to have him. Glad to have him. I'll play the guitar and I'll do my famous disappearing thumb trick if he likes. Okay, so that's about all we can do with chapter 5. Does anybody want to go over chapter 4 again, which is going to be a fairly big part of your test? Do you have any questions on anything? Do you want to look at my other tests that I did? Look at some of those questions? Anything I can do for you? We're not doing anything this Saturday. We can sit here all day, right? You okay with everything, Fiona?
I had a question with like the chapter 5 exercises. Like I have a hard time figuring out when like a transaction happens to know which ratio it's going to affect. If that makes sense.
Well, yeah. Well, first of all, read it carefully. I would have your textbook in front of you because they'll only be talking about the metrics that are in the book. Sales, first of all, a lot of metrics are sales divided by something, okay? Or income divided by something. Let me back up. One metric you see a whole heck of a lot are expenses divided by sales. How much was this expense divided by sales? Others are going to be things like total assets over your net income. So your question, I'm not sure I can really answer it directly without seeing one of them. Could you show me one of them? Do you have it in front of you or something you can tell me?
No, it was kind of like a general, like if there was a way to kind of
Okay,
like.
here's a general rule that might prove useful. Many, I would say most of your metrics are going to have one balance sheet item and one income statement item, okay? So maybe that would help you. The real exception to that is the very most basic one, which is your net income divided by your net sales to get your gross, or not gross profit, but your net profit margin as a percentage. But almost everything else we looked at here, Fiona, let me go back up here. Go home, won't let me go home. Let's take a real quick look. That's a good question you brought up here. Your earnings per share. I mean, this one has nothing to do with the financial statements. Again, you notice that it's net income divided by something from the balance sheet, right? That's a pretty common trick. Find another one here. We had a couple more, huh? The return on assets. This is pretty basic. Again, net income, not divided by sales, Fiona, but divided by average total assets. That means that they did pretty well in 2008. They got $7.08 of income, is the way to say it, $7.08 of income for every dollar of fixed assets. Now you take that 7.8 and you divide it by our net income percentage, and that gives you the total ROA, total return on assets. So that's kind of just a general rule. You will do a lot of what's called interstatement analysis, meaning you'll take something from the income statement and give it to and work it with the balance sheet. Okay. If you want to email me one of the ones you're stuck on or text me, you can do that afterward, and I'll get right back to you. Okay. What do you think, George? Coming along here? Is George still with us? I can't see. Hello down there.
He looks like he's frozen.
He's frozen. Are you
Yeah.
frozen, Callie? Callie's not, George. This is not a nice thing to say about one of my best friends for over 60 years. I had never Zoomed in my life until last semester. You can tell I still don't really know what I'm doing with it. And some of my old high school classmates from the class of 1960, a long time ago, held a Zoom meeting. And one of our classmates showed up, and we're all so glad to see him. His name is Jose. And Jose gets up there, and we said, "Hey, Jose, you old bear, how you doing?" And he put his hand up and then dropped it, and he froze. And we all thought he had just dropped dead. We really did. We were talking about how to tell his wife at one point, and we were getting very concerned. Then finally he unfroze. Anyway, I digress. How did we get on that? I digress.
Because George
Any
is
questions?
frozen.
There we go. Questions, Callie? Anything I can help you with?
Can you explain how trading affect ratios?
How what affects ratios?
Yeah, trading affect ratios like net profit margin.
Okay, net profit margin, that would be your net income divided by the sales, okay?
Yeah.
Now that gives you a percentage, and that percentage represents every dollar you retain after your sales. Like right up here, you see here we have an income statement.
What was the question again?
I'll paraphrase if I may, Callie. Callie was asking regarding these different measurements. What do they really affect? What do they really mean? Is that a fair representation, Callie?
Yeah.
Yeah. In other words, Callie was saying, okay, well, we came up with, we took the net income, we divided by the sales, and we got 40. We got a certain percentage here. Hold on, I need to move this down. Net income. Okay, you see this 7241?
Like how increase, how decrease.
Okay, it will
Or-
the lower your, it's what it is, Callie, it's just a ratio of your expenses to the revenues. In other words, if you have $100,000 in sales, right?
uh-huh.
And you have $1 million and you have, let me start again, you have $100,000 in sales and 10,000 in income, that would be a 10% return, right? We know that.
Yeah.
Right?
Yes.
Your question is, what would change it? Well, what if the next year your sales went up to 2 million and your expenses stayed the same? Then you're going to show 20%. So to answer your question, if you can lower your expenses or increase your revenues, that you will improve that metric. And then when you get into the other things like the return on the assets, if you can lower your investment in the assets, spend less on assets, increase the income, you'll be that much better off. I think it's a good question, Callie, because a lot of times the students at this point look at these metrics and don't really know what it's telling them. And I think that's kind of what you're asking, huh?
Mm.
Let's look at this one here real quick. I'm pulling out the old calculator here. What I'd like to do, come here, you. Calculate I'm taking that first year here, whatever that dollar, 7241 divided by 66,000 equals, I get 11%. 11%. That means that this company keeps 11 cents out of every sale dollar they make. Make sense? You sell $1 worth of your product, you can put 11 cents in the bank, is what they're saying here. Then they were talking about, excuse me again, the earnings per share. And I must move this. Earnings per share. The net income was 7241. Divide that by the outstanding shares, which they don't give us, I guess, huh?
Mm.
That help a little bit, Callie?
Yeah.
Yeah, George just froze up there.
Yeah. Oh, there he goes.
Oh, George, you were frozen for quite a while. Did you know that? Yeah. Can you hear me, George?
Yeah, it's telling me right now something about my service, and it's telling me to
Yeah,
keep.
yeah, you were out of touch. You were frozen in time for about, I don't know, 10 minutes or so, and we were ready to send the paramedics out to your house to make sure you were okay. Did you have any questions, Kate? You want to talk about or anything?
Oh my gosh, I have so many questions.
Okay. Well, you guys
But
know you
I
can
just-
always, if you want, well, go ahead. Give me a question or two.
I was struggling, to be honest, with chapter 4, and I think it kind of trickled a little bit from the adjustment of journal entries, and so I'm stuck on the chapter 4 quiz,
Okay.
which asks to analyze American Eagle Outfitters annual report. And looking at question 1, I'm not confident about answering like any of those questions, and I'm just, I guess I'm just stuck.
Okay.
Yeah.
Chapter 4, they made you go back into those financial statements. You have an example of what you're talking about?
So I'm just looking at it right now, actually. And so the question is, did the company accrue more or pay more for rent in the fiscal year? And I found the line that says accrued rent, but I don't see anything in that appendix that talks about how much they actually paid in rent.
Hey, I think George, are you frozen again there, George? You with me? Are you the one who asked me about this problem with the accrued rent being more or less?
No, I don't think that was me.
A couple of students did. Here, very simple. On the accrued expense line, the current year is the expense, the prior year. Let me start again. Read the question one more time, real quick.
Did the company accrue more in rent or did they pay more in rent in
Okay,
that
here we go.
fiscal
Here we
year?
go. The current year is the accrual number. The prior year is the payment. Simple as that.
Say that again.
No, I don't want to repeat myself. No.
This is recorded, so I can always go back.
The current year is the accrual. The prior year is the payment. You have any understanding why?
So
Because I'll let you talk. Go ahead. See if you can put it in your
I
own.
guess I'm wondering why you wouldn't record any of the rent that was paid during that year. Why is it all under accrual?
Well, it's not all under accrual, just the amount that you need to put. The rest would be in rent expense.
Right, and I guess that's what I'm looking for. I don't see a rent expense.
Let me just
in that.
let me just get back to that question you asked, because I'm sure other people will.
I have a question.
What will the accrual number you see for last year, by definition, was paid in the next year? That's the whole point of an accrual. You accrued rent of, say, $40 last year. You paid it in the subsequent in the following year. That year ends, and you accrue, say, $50. What you accrued this year is what you're going to pay next year.
Right. So
Make
so how do I answer that question then? Because
the answer is they're asking you, did they accrue more or less? What are the two numbers? Read me the two numbers. What's the number?
Well, I could only find the line item that pertains to accrued rent, and I don't
but
see the rent expense. So am I safe to assume that they didn't pay any rent, or there isn't a rent expense?
No. To answer that question, all you have to do is look at those two numbers. The number from the prior year is what they paid.
I see. So I'm looking at the accrued rent from the
Right. I don't think
previous
they're asking you to
fiscal
worry
year.
about the rent expense. They're asking you on the accrued rent. Which year did they pay more or less than?
The question is, did the company accrue more or did they pay more within that year?
Which number's higher, the prior year or the current year?
Let me go back and find that line.
You following this, Fiona?
So accrued rent in the fiscal year that the question pertains to is 83,000 approximately. And
What
then
year?
this is 2018, which is fiscal year 2017. In the prior year, the number is about 78,000. So
Okay.
they paid more.
No,
in
they
rent.
accrued, the current year you said is higher, right?
Well, they paid more in the current fiscal year than they did in the prior fiscal year, but that doesn't sound like that's what they're asking in the question. The question isn't to compare one year to another. The question is, did they accrue more or did they pay more? And I guess that's where I'm confused.
Which number is higher, the current year or the prior year?
The current year is higher.
So they accrued more. The other number is what they paid.
Okay.
They accrued X amount of dollars on December 31st, and then they paid them in January. Then the year came by to the end, and then you had a new accrual number, which was happened to be higher.
Okay.
And again, you can get back to me later if you want to text me or email, or even
Okay.
if any of you want to do a quick Zoom or just a quick chat back and forth, we can always do that.
I have a
I
question.
would go ahead, George.
Oh, sorry. Is there any way that we could review the quizzes again so we could see what the right answer was and what the correct answer?
Yes. I thought I had gotten back to everybody on that. Yes, I think you asked me that before, right, George, or someone did?
Yes, I did. Yeah, because I was trying to see chapter 4 to see.
Here's how you do it. Go into.
I asked that same question, and Cornelia was actually able to show me how to access past.
Okay.
Would you like to speak to it then, Kate? Answer
Yeah.
George's question?
Yeah, let me just actually pull up her email because it was.
I think you just go into the modules, you go into Canvas and you click directly to McGraw-Hill.
Yeah.
Well, you go ahead,
So-
Kate, if you've got something.
Yeah, I just want to make sure I would have to refer back to her email, but let me just check. So you click on McGraw-Hill.
Okay.
You then go into my section,
Okay.
and then I'm doing it as I'm telling you, just to make sure I'm telling you the right information. And then you click on the chapter that you're looking to reference,
Mhm.
and then you click on that part.
The one that says C report, right?
Mm-hmm.
But it doesn't show up. It just shows me a grade, and it says exit now.
No, you should be able to go in there and pull up that quiz. You have to hunt and peck a little bit, but you should be able to just look it up and you'll see all the questions there and answers.
Let me see one more time if I'm doing this right.
Yeah, it just tells me what my score was, and then the total score, and it just says exit now. You're done. You've submitted your assignment. That's all it shows me.
Oh,
Okay,
that's
let me-
bogus.
let
Yeah.
me-
But I've already encountered that twice with 2 different quizzes where I'm like, hey, I want to see where I went wrong,
Okay,
and I
There-
couldn't see it.
okay, there's a disconnect there. And my boss, Cornelia's gonna have to, she's the expert in the guts of the McGraw-Hill canvas. Have you tried to look at your test at all, Katie, or just,
I think I have, which is I can't remember if it was
you
the
succeeded in
learn
looking at the
if
test?
it was the Learn Smart or if it was something else.
Okay, I will, George, that's a question that we need to answer because that's gonna be more important as we go along.
Yeah,
you know?
because I really had like trouble with chapter 4, and I got so frustrated with some of the questions. And
Yeah, I did too.
I try to look back
Chapter
at it.
4, yeah, chapter 4 is pretty darn tricky.
Yep.
May I offer you something here? Hold on, I have to make that a little smaller.
Okay, so she does say to click on McGraw-Hill, and in the list with the links, this will take you to the Connect course site. Then find the module for that chapter, and within that, find the quiz and click on it there. But I think we just tried that, right?
Okay, that's something we need to clearly. Can you see what I just put up here? Some yellow lines, okay.
Yep, we can see.
Counting 230. This was from my class where I make up my own tests. These are the types of things. When a company issues stock, what's the impact on different accounts? Company issues common stock. Well, we know we're going to receive cash, right? And what happens?
Hey, George, I can access chapter quizzes before that. Let me just see.
Yeah, so I was able to now see chapters 2 and 3,
Mm-hmm.
but I can't see, like, for example, I select where it says C report, and then it takes me to the list. I go to the thing and I say view attempt, and then it shows me my attempt. And it tells me, hey, this is where you messed up, and then show correct answer. But for chapter 4, it doesn't do that.
Maybe it hasn't
Doesn't-
been graded yet.
I'm not sure.
Oh,
Did
I
you
haven't
get it?
graded. Oh, okay. I'm sorry. Oh, I guess I apologize. I may be at fault there. I may not have gotten to the chapter 4 quizzes yet. That might be the problem. Let's hope that's the problem, okay? Did you get your grade? Did any of you look at your grades to see if you got in Cengage in Canvas to see if you got graded for chapter 4?
Yeah, it automatically does it.
Yeah. So when you go to view
Oh, the
attempt,
quiz- okay,
it doesn't
yeah,
show you the show correct answers
Mm-mm.
part. Mm.
It just says you submitted your assignment, exit now, and it tells me my grade.
Okay, all right. Cornelia swears there's a way to do that, so we'll get back to her. I'll get back to her on that. I just thought I'd show you this. I can email this to you all. Maybe that would be the thing to do, and you can look at it. But these are the types of questions that some of them, just a couple of these came out of the test bank. I like making up my own tests. I also like giving out problems for you to do, but we can't do that in this online environment, huh? Matching principal, revenues and expenses. Know what's a current asset and what's not. Accumulated depreciation, it's a contract asset, but it's still a fixed asset. What's not part of equity? It's not part. Now here, George, you had this question a day or two ago. Yes, do we have to do any real figuring of the depreciation? And the answer may be a little bit. They bought a machine for $375,000 and 15 is the salvage value. Did we talk about salvage value, residual value yet? Is this the first time you're hearing that? It looks like it is. Looks like it is. Let me skip that for just a second. Here we go. Know your journal entries. A lawyer gets a retainer from a new client. A retainer. You go to your lawyer and you say, my wife is cheating on me. I want you to follow her. He says, give me $12,000 right now and I'll get started next week. That's unearned revenue, isn't it? You want me to send this stuff to you guys? I think it would be a good idea, no? You're looking at me like it's difficult. Does this make sense here, Callie, this one? You went to a lawyer and he said, I need money now. Give me money and then I will do the work. He debits cash and he credits unearned revenue. Then he does $5,000 worth of the work. Then he's going to debit the unearned revenue, which is a liability account, and credit the regular income. These are the kinds of questions that might come up and they make you think a little bit. At the beginning of 17, FatRex Equity, they had common stock, paid in capital, retained earnings. Those are three different things. The net income was $60,000. They declared a dividend and issued more stock. Not that tough if you line these up. Common stock, well, they issued more, so that goes to 150. Retained earnings is going to go up by the net income, and you add those up and you come up with your number. I will send, go ahead, I'm sorry.
Question back to those two right now. The unearned
Yeah, here we go, right here.
The reason, so I just want to clarify, like when it comes to this, when adjusting it, at the moment we receive the money, it goes into cash because we already received the money. We just haven't earned revenue. But then after that, when we start actually working and earning that money, we no longer adjust cash because cash is never adjusted.
Absolutely. I'm glad you said that.
A different entity that stays on the right side of the equation where we just go ahead and reduce the amount of unearned revenue and now we put it into sales or income.
Right, exactly right. We have to, you say right side, left side, debit, credit. Yeah, we're going to debit, we're going to credit the unearned revenue when we get the money, and then we're going to reduce it with a debit, and now we can credit a legitimate income account.
And in this case, debited unearned revenue and the credit legal fees are all within the retained earnings section. Like,
no, don't make that mistake.
Okay.
Neither of them is in the retained earnings section. It will affect retained earnings eventually. Yeah, I think I know what you were saying though. The unearned revenue is a liability, and this is income.
Yeah, under shareholders' equity, like under that section, right. We won't touch any of the other ones like liabilities or assets anymore.
Yeah, the one on the right would be under that umbrella. The one on the left would be with the balance sheet. But yeah, you got the right idea. Okay. I'm just going to pick out some quick ones here. I don't want to discourage anybody. When do you record a sale? Who wants to answer this one? A, B, C, or D? Don't be yellow. You record a sale at the time you deliver the goods. The moment you put that merchandise on your truck and that truck driver signs the bill of lading or whatever paperwork's involved, and the second he drives out your store door or factory door, that's when you record it. Not when it's paid necessarily, certainly not when the order is taken. Not necessarily, you know, when we receive payment, kind of the same answer twice. Okay. Prepaid. So am I scaring you people? No. Prepaid supplies on hand was 9. And they bought another 11. So that's 20,000. You counted 12 at the end of the month. How much did they use? How much did they use?
Can I
Does
go
anybody-
back to question 9 for a second? And I'm sorry to do
Go
that.
ahead.
So let's say a customer places an order. I thought that you accrue that. Like I thought
No.
that you count that
No,
like in sort of like when it's not a business that sells physical things, but it's like a consulting company. And
no,
so,
I don't think so. I can't think of any examples on that. Even
because I've been in situations where, I signed a contract for something with, an external company, and then I have to let the accounting team know about that because they factor that into their accruals, which is why I'm confused. Yeah.
Well, yeah, they made, that, I mean, I'm not telling you they don't record the information. They're not going to record it in the general ledger. They're going to record it in a module of their QuickBooks or whatever system they're using under orders.
Got it.
The job
Okay.
the job that brought me to Santa Barbara 22 years ago, every day I had to pull off the sheet of paper and it would say existing orders, right? $100. Then we'd get another $200 of orders. I would add that, and that's called available orders. And then I would subtract what we expected to ship. So yes, in that respect, you keep track of it, but it doesn't
Okay.
become an accounting transaction.
Got it. Thank you.
But yeah,
Just
and that's a good question because it further pushes in that notion of the matching of the revenues and expenses.
and then just to reiterate on that, basically, we record it the moment it's shipped or the supply or the service is given or provided, or in the good is sold or not. And
You-
that's where adjusting it's taken into consideration because
Yeah,
at first
exactly
we're going
right,
by the
exactly.
assumption it's
Yeah,
it costs a certain amount, but the moment that we actually find out the actual numbers and we adjust it, that's when it's recorded,
Yep.
and that's when it gets posted onto the thing, right?
Yeah, exactly. Sometimes you have to estimate a few things, but yeah, when like with the things like insurance and the supplies, when you know how much you use, that becomes the expense to adjust to. Yeah, that is absolutely correct. Some of that information at month end will be by definition an estimate, things like the electric bill and other things. Does that answer it a little bit, George? Here we go. 12 is an easy one. Hey, Callie, you want to look at number 12? Which of these accounts is not closed? What did we say we close? Callie, do you remember?
Yeah.
Talk to us.
Expensive and revenue.
All right. So
in-
which one do we close that expense? Yes.
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 Yeah.
Yes. No. You don't close retained earnings.
Yeah.
You close things into retained earnings. Let's see what we got.
There was
here.
a question, which actually, how do you close an other expense account where
Mhm.
there was a question on chapter 4 quiz that says prepare the closing entry for other expense income net account.
Yeah.
And you have to put it in the general ledger. And I would like to know how you might be able to.
What you're talking about there, when you say other revenue, other expenses, that would be your interest expense, interest income, and you're doing the same as any other. I mean, interest expense is its own account, so to get rid of it, you would credit it. and debit retained earnings. I mean, there's really no difference between
Got it.
other expenses and anything else. Other expenses could be just one account. You know, maybe a company has all kinds of little type expenses like postage. The UPS guy comes once in a while, things like that. Water for the water fountain in the office. And they put that all into one general category called other expense. Well, that's the account you close, other expense.
Okay.
Makes sense?
Sort of. I'm not quite sure why you would need to then debit retained earnings.
Because you credited the expense.
But wouldn't you have done that already if you're preparing a financial statement for the SEC?
No. Another good question, but the answer is no, because you prepare the financial statements by definition before you close.
Ah, okay,
You
got
don't do the closing entries until you have wiped the sweat off your brow and you tell the boss, I've finished the financial statements, signed these things, I'm going to mail them out to the world.
So
Then-
when looking at that, what's it called? The American Eagle Outfitters, like that example, the appendix, so that doesn't have the accounts closed yet?
That has nothing to do with whether the accounts are closed or not. That would have the accounts that are closed, absolutely.
Right. So the question, prepare a closing entry for the other
There you go.
expense
Yeah.
income
Yeah.
on that particular. So I
Those
would
are-
assume that it would already be closed if it's
No.
posted for the public. So that's why.
No,
because again,
not at all. What's posted to the public are the financial statements, which has everything.
Mhm.
The closing entries are an example of almost like an adjusting entry. The public doesn't see the closing entries. That's
Okay.
behind the scenes. The only thing the public might see as a result of the closing entries would be a post-closing trial balance, but nobody wants to see that anyway.
Got it. Okay.
You do the financial statements and then you close. Remember we said the adjusting entries, the public doesn't see those entries, nor do they need to. Same thing with the closing entries.
Okay.
Closing entries come after preparation of the financial statements.
Okay. Thank you so much for explaining everything. This is my
Ah,
first
we-
time attempting to understand accounting.
We do
So-
our best. We do
Yeah.
what we can. Here you go. I want you to look at number 14.
Okay.
Especially you, Winona. You see number 14? Wardell Bracy borrowed $80,000 from a bank at 6% interest. It's to be repaid in 5 years. How much interest expense accrues in 2018? You want to take a crack at that one? You want a little help with it? He borrowed $80,000, right? 6%. What's 6 times 8? That's $4,800 per year, right?
Yep.
Or $400 per month. Would you agree?
Yep.
So he borrowed the money on April 1st. So that means 9 months. Your answer is 36,000.
Hmm.
Let's not get confused by the simple arithmetic, but it can. You okay with that, Winona? You look a little stymied, no? The key thing, I think, is to understand when you see an interest rate, it represents 12 months.
Thank you for that.
Yeah. Okay. Here I'm asking you, going back to 14, what is the journal entry when he borrowed the money? What did he borrow? He borrowed cash. Cash goes up with a debit. And now a liability called notes payable goes up. Then the question we just asked, what is the entry to record that accrual? Well, we know it's $36,000.
Wait.
And we know, go ahead.
Sorry, so I'm so sorry. For 14, is it 36,000?
I think so.
Yeah.
$80,000 a year. I'm sorry, $80,000
Okay.
times 6% a year. That's $4,800
$4,800.
a year, right?
Yeah. Yeah.
When did they borrow the money?
They borrowed it in April, so that's 9 months by the end of the year.
So that's 9 months times 4, right? 36,000. That's where we get that number.
Oh, I multiplied it by 9 instead of by
Yeah,
4.
so by night, it's
You do multiply it by 9. 9 times 4 is 36, right?
Oh, because it accrued over those 9 months, or?
Yes.
Okay.
There was no interest in January, February, or March. I'm glad we went over that problem because I'm sure this type of thing will be on the test. I'm sure.
0.06.
So now that we know how much he borrowed, he will debit cash, credit
Oh.
notes payable, right?
Actually, I got 3,600,
Yeah, I
not
got
30.
3,600. That's why I came back to it. It's 3,600. It has an extra.
Oh,
zero.
Okay,
30.
3,600. Shoot me with the 0. You're right. You're right. I'm so sorry.
I was like, yeah. I'm like, it
I
doesn't.
am so sorry. I'll tell you. I'm
I'm just
sorry,
looking.
George.
Yeah,
Oh.
I'm just looking at my calculator as well.
All right, who's the professor here? Huh? No.
Thanks, George.
I am so sorry. Let me fix it. I'll tell you why. I handed this test out, and 15 minutes into the test, the student comes up to me and said, none of these answers are right. And I did the math just like I said, what are the answers is right? Come on, I can't help. 3 or 4 students came up to me. And then finally, this one girl, she came from Burma or some place, and she wasn't taking my answer, and she finally got it through my head. So how about we do this, everybody, huh? This make you happy? It's embarrassing, and I must apologize. I guess this would be 2,400. This would be 3,600. Huh? Also on my tests, which you're not going to get the benefit of here, is since I make my own tests up, and they're pretty big. I like to give out big, long tests that take up to 2 hours. If I make a mistake on a problem like that, that becomes a freebie. Everybody gets that one right, and that's what happened in this class. I don't know if that's good policy or not, because it seems as soon as I handed out a test, the first thing they look for are my mistakes rather than trying to do the test, okay? What's the correct
That's a good way to learn.
Yeah. What is the adjusting journal entry? Well, we know it's 36,000. We know we have to debit interest expense, right? We debit interest expense, and we're going to accrued interest. Look at this. I got the same number right here. Here we go. Oh, I don't have any dollars. That's your right answer there. That is your answer there. What happened to my colors? Okay, I won't worry about that. What do you think, George? Make sense?
Yeah, but it still would have the extra 0, right?
Yes, it has the extra 0. 3,600 is the answer. 3,600, okay? We got that. 3,600 is the answer. And I'll fix that problem. Okay, here's one where you have to think a little bit. And again, I don't know what's going to be on the test because it's a Cornelia Cengage test. Fat Racks Factory purchased a machine for $96,000, depreciated over 8 years, right? What's the balance at the end of 17? So that means they've depreciated this machine for 3 years, right? 15, 16, 17. Now, I hope this isn't one of my mistakes. So it's 8 into 96 is what? 12, right? Would you agree? 12 times 3 is 36. That would be the balance in. Okay?
Sorry, how did you get that number?
$96,000 is how much we paid for this machine.
Is
We're-
that how depreciation is calculated? You just divide it by the amount of years you think the machine is gonna.
Yes. So you divide 96,000 by 8, and you get $12,000 per year.
And then
So
'cause
do you
it's-
ask, so this is what you were talking about earlier about the depreciation, like in terms of like when you buy a computer, you think it's going to depreciate in 2 years.
Exactly. Yeah.
Got it.
Yeah. And
So
I
you
know.
make that, so you make that assessment at the time of purchase, and that's
Right.
how you then plan
Right.
forward.
Right, exactly, exactly. So here they decided to use this method. 96,000 divided by 8 is 12. My question is, what is the balance in the accumulated depreciation? Well, that's going to grow by 12,000 a year. What if I said, what was the balance in the machine account? Anybody? That's an easy one if you think about it.
60.
Don't fall into that trap. Nope, nope, nope. The
Or-
machine will always be staying at
Oh yeah, it always stays at
96,000.
the original value.
My next, you just answered the following question. What would the net book value be after 3 years? 60,000,
But it
right?
goes, same goes for like property. The only thing difference with property is property goes up in value. In
Yes, yes, it
most
does.
cases.
And,
But
and
at the end of the
sometimes, and
day-
sometimes equipment does too. It depends.
Yeah. But at the end of the day, no matter what in accounting, we always go by the price that it was bought initially.
Absolutely. Could not say it any better.
Uh-huh.
You say it better than Cengage does in this chapter.
Mhm.
This is a tricky one. I don't think she's going to bury you with that. This is one that I don't know if this will be on the test, but Cornelia loves this one. I'm going to go over this, huh? At the end of 2016, FatRack had assets of 30 and liabilities of 20. If assets went up 50 and liabilities increased by 20, what happens to your stockholders' equity? Does that look like a tough one to you?
Yep.
You have a piece of paper in front of you, please? Can you pick up a piece of paper? Write assets equal liabilities plus equity. Would you do that for me, please? Have you done that?
Yeah. Well, in the first part, liabilities would technically be 10.
So what we want to do here is start with what they're saying. And at the start of the year, put down 30,000 in assets and 20,000 in liabilities in your equation. Would you do that for me?
Yeah, and then
Now,
sure,
what would the equity be?
10.
10.
10. Now, what happened? Assets went up by 50, right?
Mm-hmm.
Liabilities went up by 20.
By 50, meaning that they went up to 80?
Yes.
Okay.
And now the liabilities went up another 20. Add those two rows down, and then calculate your equity.
So it would be 40.
Yeah, it would be 40.
Are you sure? Is that right? Did I make a mistake here? Let's see, 30 plus 50, that's 80.
And then 20 plus 20 is.
Yeah, I guess it is 40, huh? You guys got 40?
Yep.
Okay, I'm not going to send this to you. This is too carelessly done right now. But yeah, my point is, good thing I'm not the math teacher. If you want to stick around in a little bit, I'll show you a little joke with the numbers that I think you might. Anyway, what's my point here? My point is getting away from my terrible math. Use that template on the test. I would have that written down on a piece. Well, supposedly you're not allowed to have any stuff in front of you, but I trust, a piece of paper. And assets equals liabilities plus equity. So drop your beginning numbers down and then just make the changes. Liabilities went up. Let me look at that one more time. Liabilities increased.
I think this is like one of those situations where unless, because I'm just not used to thinking like that.
Yeah.
And so unless it was a problem that was presented to me in one of the practice exercises, when I see it as a new problem to solve, I get stumped. So
Yeah, that's the whole fight throughout the accounting world.
fight is a really good way to put it.
Yeah, when you get into the next chapter 6, 7, you're going to hear me using the word template all the time.
Okay.
Template.
I like templates. I like equations and templates that I can plug in, but when
Templates,
Yeah.
huh? Like when we get into chapter 6, we're going to go over a little more on the income statement. And we're going to have to know in our head that it's going to be sales minus cost of goods sold equals gross profit minus the two types of operating expenses, selling expense, admin expense, to get net profit. And the acronym I've used at another school in here is Some Clowns Get Silly at Night. Some people like that kind of stuff. Sales, clowns, cost of goods sold. So anyway, I like kind of giving them out, and you can take them or not. 3 types of cash flows. Operating, investing, financing, gambling. I don't think anybody took that as the right answer. Now, template time. Are you ready for template? Can I ask you to write something down again, please?
Mm-hmm.
Please write beginning retained earnings. On the line below that, write add net income. On the line below that, write less dividends. And the 4th line is ending retained earnings. That's a template. That's a template. Beginning retained earnings plus net income minus dividends equals ending. So look at what we have here. They're giving you the beginning, 60. The net income was 40. Hold on. This is why you need the template. Drop in what you know. You know the net income was 40, right? Put that to the net income line.
Yeah.
You know the dividends were 18. That goes in as a minus.
Yeah.
You know what the ending is, 150. Tell me what the beginning was. That's just a little math there. Does that make sense, Callie, this one?
Yes, 128.
128 is correct. The $128,000 question is correct. You see how useful the templates are, Winona? Oh, Winona may be gone. Bradley has now pinch hitting for Winona. Hi, Bradley, are you out there?
Yes, I am.
Hey there.
Okay. In this case,
Sorry about the confusion on the meeting. We've been going over some review for chapter 4 here, Bradley. Welcome
good.
aboard. Do you want to show your mug?
I can't right now.
Okay, that's okay. You're in the bathtub, I understand. We were just going over a problem here, number 22, Bradley, where I made them. This is the type of thing you probably get on the test. They're giving you some information about retained earnings. And on these type of problems, I'm urging the class to write a template down. Beginning retained earnings plus net income minus dividends equals ending. If you do that, Bradley, and just drop the numbers they're giving you, you'll be able to figure this out.
in this case, we would just do it upside down, where basically
Yes.
150
Yeah,
plus
so your net income was 40. Your dividends were 18, so you know it went up 22, so it had to be 128 to begin with.
So that's, because that's the difference between
Yeah, because
22 and 150.
Yeah,
Or-
they might not give you the dividends. They'll ask you to figure out what the dividends were. It seems like a silly math exercise, but it demonstrates that if you can do it quickly, you'll understand it. Debit and credit, left or right, huh?
Mhm.
God forgive me. Did I ever tell you, this is not really a joke, but it's meant as a joke, but it has a point, okay? Did I ever tell you about the guy who worked 50 years in accounting? And every day when he got to work, he opened up his desk drawer and he pulled out a little piece of paper about that big. And he looked at it and studied it for a moment, put it back and locked it up. Did that every day for 50 years. And after he retired, after 50 years, people were curious to see what was on that piece of paper. You know what that piece of paper said? Debit's on the left, credit's on the right. Okay? Hopefully you're not going to be that long understanding that, okay?
I think that way every time I'm driving and someone says turn left, I always have to think, which hand do I write with?
I know.
Yeah,
know,
like the
driving on
other
the-
left.
I don't want to insult women.
I always confuse those two. I
Kate,
can
you're-
totally
Kate, you're-
relate
Kate,
to that.
I know what you're talking about. What I'm going to tell you real quick, and don't report me to the politically correct police, please. The students who tend to drive me nuts are the older ones. When I say older, 50 and up, especially women. Okay, no offense, Kate, but you're nowhere near there. You're not in this category. The same thing always happens in 110. I say cash goes up with a debit and it goes down with a credit. And you know what every one of these older women say? That's not right, because when I get money at the bank, they credit my account.
Mm-hmm.
Drives me nuts to get over that hump with them, huh? Who's responsible? Company's management. I don't think we talked, did we ever talk about liquidity yet? I don't think we did, really. No, the Sarbanes-Oxley Act. I mean, that is super important in the world of finance, huh?
Oh, liquidity. Yeah, we have. Basically,
Okay.
let you know that any type of asset, whenever we would put it into like a balance sheet or an income statement or anywhere, we always do it as what's more cash or what's
Absolutely.
converting to cash
Liquidity.
faster.
Exactly right. Cash is liquid itself. Yeah. Assets and liabilities are always in liquidity order.
And then when it comes to liabilities, basically it goes by which one has to get paid first.
Yep, same thing. Yeah, exactly. Those would be, I don't want to use the word liquid, but yeah, those are the ones you have to pay first. Absolutely. Sarbanes-Oxley is all about accounting fraud. Enron, the largest financial fraud of a corporation in American history. And the bum CFO was a guy from my area, New Jersey. I don't know why I keep telling you that. Take a look at this one. Mike's corporation lost money, but it still paid $4,000 in dividends. Which of the following is true? Do dividends affect net income?
No.
No, good, because what happens when you give a dividend out, you're crediting cash and you're debiting retained earnings, which is an equity account. So dividends have nothing to do with net income. And that's a mistake a lot of people make on the test. Make sense, Kate?
I'm curious, and I'm sorry if this is a silly question, but what is the difference between cash and retained earnings?
Cash is cash. Cash is coins and checks and direct deposits and wire transfers and automatic payments, huh?
That's just how much
Retained
cash you
earnings-
have on hand. Okay.
Retained earnings has nothing to do with the cash, in the sense that retained earnings is the cumulative net income and losses over the years the company has been in business.
Got it. That was the part about it being accumulative. That's a part
Yeah. You start a company today, you have no retained earnings. You make a profit of 10, you now have 10 in retained earnings. Next year, you make a profit of 40, etc. If you choose to give away part of the company with a dividend, then you've lost that much of that equity. So
just to clarify, retained earnings add up over the number of years that the company's in business. It's not just for that year.
No. It's an asset account. So by definition, it's not a temporary account. So yes, it goes on forever. Yeah.
Got it. Okay.
I mean, a
Glad I asked.
company can be in trouble and have negative retained earnings, which means on paper they're basically out of business. They're insolvent. And the only way they will survive if they can convince a bank or somebody, look, you were asking about what you do when you get a big order, Kate? A company like that would run to the bank. I have an order here for $1 billion that's going to save our company. But I digress a little bit. We better know this, huh? Ah! Who put that there? The answer is A. What order? Income statements, equity. This is the type of question Cornelia and I like to ask a little bit. What happens what's the impact if you don't do something? FATRAC failed to accrue the last week's salaries. They issued financial statements without recording $25,000 worth of salaries.
I'm actually really glad this question came up because I remember, I think it was chapter two or three where a question within the quiz or within one of the exercises came up about overstated and understated, and I was like
Okay.
flipping.
That was chapter
speaking
4.
like it wasn't. Well, it was a question actually in chapter. I think it was chapter 2.
Okay.
And it was asking. It was in the Learn Smart exercise, and I remember I kept getting it wrong because it wasn't covered in that chapter.
Right.
So,
And this is one you got to think your way through.
yeah.
Yeah.
Okay,
Can we
so
go through that a little bit?
Yeah. Do you want to take a shot at this, George?
Well, yeah, basically at this point, when you think about it, because then they forgot to say, hey, you know what, we actually owe our employees, then notes or accounts payable is
Accrued salaries payable, but go ahead. You're good.
yeah, the payables are not. So like, let's say, hey, they are stating on their balance sheet, they're saying, hey, we owe in payables, we owe $20,000 or $20,000, but then they forgot to actually input, oh, but on top of that, we actually owe employees 25,000. Then by the time that the balance is closed, we think it's 20, but it's actually understated because in reality they owe 45. Not
That's
the same.
exactly right, huh? We did not accrue a liability,
Mhm.
right,
And
Kelly?
and would that then mean that assets are overstated because then
Had nothing to do with assets.
okay.
The effect of that is liabilities are understated and
And
net income
income.
is overstated.
Net income. Got it.
Make sense, Callie? You didn't report an expense. And
Yeah.
what you're gonna learn, I think, in the next chapter or two, is if you make a mistake in year 1, you automatically screwed up year 2. And that's kind of an interesting thing. Here we go. Salaries worked from the last week of the month, 36,000. Know this journal. This is your basic adjusting journal entry for salaries. You debit salaries and wages expense, whatever. Credit accrued salaries payable. If you put down accrued payables, that would be wrong. It's accrued salaries payable. Your book might say salaries payable, but it should say accrued salaries payable. Anybody have a question on that one?
Wait, give me a second. Debit salaries.
Let's put a number up there. Well, we do have a number. What is it? 36,000. That's an expense we have to record.
Okay.
So we increase the expense with a debit and increase the liability with a payable, right?
Yeah. So it's because I didn't read the part where it says that October 7th is the actual payday, but we're recording it on the 30th. So
Right. And then on payday, they get rid of that liability.
Yeah.
What's a current asset here? This is an easy one, huh? You should pray you get this one on the test, right? We understand that a prepaid expense is a current asset. Current asset. You like my test?
This is great. I really.
Well, I honest to God, I don't know if we should be doing this because it might totally screw you. You might get it. In other words, you might get a totally different approach in terms of the wording, but this should help, I think. Here was a question I gave. My students argued with me on this one. I used the word ordered 1,200. And I should have said bought, I guess. Anyway, the way I wanted to interpret this problem was we bought 1,200 at the beginning of the month and we used 1/3 of it. So your answer is 400.
Mhm.
But my group said, well, they ordered it. You said if it's ordered, it doesn't go on the. So that's kind of a lousy question. Here's a good one here. Let me fix this real quick. I wonder if this test was a decoy. Can I tell you a secret about me? When I have somebody in my class I don't quite trust, I'm a little worried about maybe cheating. I make up a separate test, and this might have been one. Anyhow, what happens when a company receives a check for deferred revenue. Deferred revenue. What's another word for deferred revenue?
Unearned revenue.
Exactly. And what kind of an account is unearned revenue?
Technically would be equity.
Now, let me fix this. That's wrong. Hold on. Why is this thing giving me this goofy arrow here? I don't want to see that. Oh, for heaven's sake. This thing is haunting me. Okay, hold on here, guys. No, the answer is liabilities. Yeah.
Liabilities?
Yeah. You get a check in advance. That unearned revenue goes up. It goes up.
Right. I remember that now.
Now, here's a great question.
Oh yeah.
And probably 2/3 of my class got this wrong. The entry to record depreciation expense has what impact on the general ledger? Hi, Cornelia. I'm assuming Cornelia's there. The
Yeah.
entry to record depreciation expense has what impact? Do expenses increase? We recorded depreciation. It's an expense. So in the expenses increase. And the answer is assets decrease. How come?
Because
You wanna take a
you
crack?
depreciate.
Yeah.
Go ahead.
Well, it's the depreciation. I mean,
Why did assets go down? What account did we credit when we debit depreciation expense? There's never any exceptions to that. What is it, Kelly?
Asset depreciation.
Yeah, accumulated depreciation, right?
yeah.
That is an asset account that we're crediting. So your assets go down whenever you record a depreciation entry. It's kind of a little tricky. What makes you think?
Technically, it's like a contra account.
Contra account, exactly. Yeah, it's a contra. And contra accounts are always, hooking up with somebody. It's always married to somebody. So that accumulated depreciation is going to be married to the original cost of the asset. Yeah. Now, if anybody gets number 36 wrong, you get a rap on the knuckles. You will never see cash in a closing entry.
Why is that?
Well, we're not going to zero out cash, are we?
No,
That's-
At the end of the month, I'm not going to say, Katie, go out to the safe, will you, and scoop up all the cash, and we'll start all over again next month. No, because we only
I
close.
wish you would say that.
We only close revenues and expenses. But a lot of the students, from what I've seen over the years, they love to throw cash into an adjusting journal entry, which is not possible. Which account will never require an adjusting journal entry? I mean, you see the answer in front of you. I probably should have whitened all these out. How come accounts payable will never have an adjusting entry?
No clue.
Accounts payable, you would never have to adjust that. That's the list of the people to whom you owe money at that point in time, and that's it.
But wouldn't you
The only
adjust it if you ended up having to pay more or less?
the only payables that will go on your adjusting journal entry would be prefaced with the word accrued payable.
Oh, okay, yeah. Yeah, because accounts payable is technically what you owe to like banks and stuff. Like that doesn't get it.
Not the banks, but just the vendors. Yeah,
Okay.
you're
And
on the
then
right track though. Yeah,
Anything else, like for example, anything else, like any other payables, they would have their own separate account. Like for example,
Right.
it's
exactly. Note payable or accrued salaries payable.
Right.
You were asking about other the use of the word other before, Kate. You might have an account called accrued accounts payable, which is different. Accrued accounts payable, where you might scoop up a couple of different things, utilities or rent or something. Okay.
So what do you adjust if you, at the end of the period, found out you needed to pay more?
Okay, that's the adjusting journal entry we're working on in the book, the classic accrual. Electricity in your factory. The month ended and you consumed electricity, but you don't have the bill yet. You're not going to wait 30 days before Southern California Edison mails you the bill. You have to estimate something. So you're going to debit electricity expense or utilities expense and credit not accounts payable, but accrued accounts payable.
Just to avoid a confusion, you could put like accrued electricity's payable or
Absolutely. If you
And that
want
would
to,
be paid in the following period, is that way?
exactly. Then when you get the bill, you pay it. Yeah,
Got it.
yeah, yeah. You get the bill, that's when you pay it. All right, I'm gonna make one of you answer this one. You can read it, right?
What
Which
are the notes?
38.
30, oh, I was skipping 38, huh? Let's skip 38. No good, no good. This test was on chapters, I'm skipping that one for a reason. No, we can do that one, why not? Again, do you remember the template I just had you write down? Look at it. And start dropping these numbers in. Now here, you had a section called retained earnings, right? And you put numbers below that. Remember you set that up before? Now write the words common stock next to it. Let me show you. Give me 1 second here, okay? Okay, we're still here. Okay. We all see this?
Yep.
Here's what I'm saying. We have common stock, right? And maybe we have paid in capital. Just let me do my little Sheldon Cooper thing here. There we go, that's better. Common stock. Paid in capital, right? Maybe. Paid in capital and retained earnings. Retained. And if we want, we may not need to, but we'll call it total equity. That's the start of your equity statement. We agree? Beginning. And what do we add, did we say?
Net income.
What did we subtract, did we say?
Less
Dividends.
Dividends, right? Dividends come out. Now in this problem here, it looks like they issued more stock, right? So we have a new stock issue.
That's a tricky one. I would not think to put
Well,
that there.
Well, take a look at this. I mean, I'm always encouraging the templates.
Because I would sort of put that under, I guess I would put that under common stock without.
Well, yeah.
Yeah.
Let me help you out with that. Common stock, a stock issue, guess what? It does not go into retained earnings. Okay? It does not go there. It's not the color I was looking for.
It would go under common stock and paid in capital.
Exactly. Yeah, exactly. If you had paid in capital, yeah, exactly.
Because technically
The only thing that hits retained earnings are net income and dividends. Okay. So you could put a mark here that doesn't go there, and this would never go here. So armed with that little template, let's go back to the problem. Okay. Well, you've got the template in front of you, not me. Why don't you work on it for a moment? What do you think, Callie? Do you like these templates like this? Do they help? Can you hear me, Callie?
Yes.
You like working with the templates, the pictures like this, or?
Yeah.
Okay, so it looks like
Can you go back to the template for 1 second? I didn't, I
back to
was
the
looking.
spreadsheet.
Yeah.
Hold on. There it is.
I want to write it down so I can try and work on it.
See, a lot of these, when you get very comfortable with it, you can do some of them in your head. But typically you need some kind of mechanism to do the figuring.
Okay, thank you for that. We can go back to the question.
Where's the question? You got it? We'll see if you can work under pressure. I'll let you work for a moment, okay? I found all I need to know that I miss her. Just how long I know she'll be gone. 'Cause I'm already wishing she were close enough to hold. And her memory's only 14 minutes old. Woo-hoo!
Did you write that, or is that like a
Did I see that?
song?
No, that
Can
was
spreadsheet one more time?
a good country song about 20 years ago.
Can I see the spreadsheet one more time?
What's that?
Can I see the spreadsheet one more time?
You want to hear the song one more time?
No, the
Oh,
spreadsheet.
the spreadsheet. I'm sorry. I'm sorry. You guys are tough. Spreadsheet. There we go.
Okay, I'm ready.
Okay, here we go. Let me
Thank you.
go back. Yeah, I'm working on like 4 or 5 songs. Are you there, Cornelia? No, Cornelia is muted. I don't know what happened with that meeting. Okay, I'll be quiet here. I'll let you work for a moment or two. I'm so young and you're so old. Yes, my darling, I've been told. I don't care just what they say, 'cause forever I will stay. You and I will be as free as the birds up in the trees. Oh, please stay. All right, let me get this out of reach. Oh.
Okay.
wants to, I'm trying to do it here real quick. What'd you come up with?
And we're just looking right now for the retained earnings at balance at the end, right?
Really, what the question is, what is the balance in retained earnings? Yeah.
Yeah. Okay.
What'd you get?
400.
Correct. Do we all get 400?
Yeah, because I feel like the other numbers were thrown just to kind of confuse, but
Okay. You good
yeah.
with that, Kate? Retained earnings?
I'm still working at it. I think I don't know where to put the I don't know where to put numbers. So maybe we can.
Okay.
But-
This question is just asking about retained earnings, but I did want to make you do that template to begin with, okay? So at the beginning, the retained earnings was, what was it, 500,000?
500,000.
Go ahead, George.
Oh, it was 500K
Mhm.
under retained earnings. That was the beginning balance. And then in the first column, it would be, beginning would be 60 or 600K. But since we're not calculating that column, we're just calculating retained earnings, then we would take in consideration the next number, which is a net income of increase of 100K. That would bring us up to 600. And then they also declared that they were going to give out 200. So the other number
Got it.
won't matter in this
Good.
equation, in this column.
Okay, now I'm going to change the question.
Like the common stock number is irrelevant. in
Tell
the
me what
question.
the question, I could change this question and say, what was the December balance in stockholders' equity?
600
You have to add,
stockholders and equity. Then in this case, it would be 700
plus,
plus the 400. So in this case, it would be a 1100.
would have been 1,000,001, yeah.
Yeah, 1,100,000. Yeah.
Yeah, that wasn't the question I asked, but hopefully Callie, Kate, and George, going over it like this with the templates, I think makes a big difference.
Mm-hmm.
Everybody learns differently. I happen to like them. I like mnemonics and shortcuts and things. How about 41? How long is this thing anyway? Holy cow! Aren't you glad you weren't in my class? Look at this. We're not gonna go through this whole thing. We'll cut off at 50. How's that sound? Where were we? We were up to 41. Yeah, 41. Again, you could do this one in your head or just look at your template. What were the dividends? You got beginning retained earnings. Wow, they're giving you ending retained earnings. They're giving you the net income. The only way you get this wrong is if you do the math wrong, which I'm trying to hope I didn't do here. Did you all come back to my $60,000 number? How you doing, Callie? You finished yet?
Yeah.
What'd you get?
60.
How did you do that? Could you read your template?
I still use the equation beginning right the earning
Right.
plus net income
Right.
minus dividends equal ending right.
Yeah, so you just plugged in the missing number, right?
Yeah.
You okay with that, Kate?
I think so.
Yeah, just a little, it's a little bit of a math thing, I know. George, you seem to be comfortable with this, huh?
Yeah. I feel like this is kind of simple. It was just, for me, it's going to be chapter 4 probably would be my Achilles tendon for this.
Yeah. This one can't. Don't mention Achilles tendon. I hurt my foot about a month ago. It's still bothering me. But anyway, you ready for the next few? Hey, here we go. We've got another one of these. What happens? They failed to record depreciation expense. If you fail to record an expense, you are overstating the net income. Would you agree?
Mhm.
You know what we mean by that, Kelly? If you don't put an expense down, you're showing too much net income, right?
I know assets are overstated.
And assets would also be overstated. Absolutely.
Yeah.
Absolutely. I think that's a pretty good question. Let's not look at this one. This is just asking you to do a bunch of adjusting entries at one time. Okay, here's an easy one. 44. You bought a truck for cash. That doesn't affect equity, right?
Yes.
It just basically creates a new
Cash in
account.
decrease and equipment. Track is
Yeah.
equipment.
Overall, it stays the same, right?
Yes.
Cash went down, but the truck went up. Assets stay the same.
Mm.
Total assets. Cash went down. Well, I'm not going to give you that one. That one drove my class crazy, and they got a. Here's a question from Chapter 5. What's the main purpose of an independent audit of the financial statements? We know it's not necessarily to uncover fraud. They don't look at every journal entry you wrote. They certainly don't particularly have any interest whether you pay your taxes or not, as long as you pay the CPA for them. No, they're the auditor. It's to render an opinion on the statements in terms of GAAP presentation. Who writes the rules? The Financial Accounting Standards Board, FASB. You know, some of you, maybe you go out and you work in accounting, you do something in business, and you would never even have to worry about the most recent rulings, FASBs. Other types of business, boy, they have to be right on top of these things. Now, here's one that's super simple, but I'm making you do the arithmetic. Net sales minus cost of goods sold equals gross margin, right? So gross margin plus cost of goods sold would have to equal the sales, right? I hope that's not a problem for those of you. Which of these statements is true? Retained earnings is equity, that's wrong. We have to do the balance sheet afterwards, that's wrong. The adjusted trial balance is not a statement. Net operating income does not necessarily equal cash flows, right? We should know that. We're doing everything on an accrual basis, huh? Any questions on that one, Kate?
I would probably choose that just based on the fact that the other three are incorrect, but yeah. I guess I haven't dug too much into the cash flows yet, so.
Yeah, well, that's all we need to know about the cash flows, the different types.
Right.
If we were doing cash basis, that would be correct. Sure. And what does GAAP stand for?
Generally accepted accounting principles.
No, I made a mistake. It's C. The answer is C. All right, you think that's enough for one session?
Yeah, that was great. Thank you so much.
Okay. Hopefully, did any of you by any chance go in yesterday to look at our meeting on the video? Yesterday we had, or was it 2 days ago? It turns out I forgot to record that meeting. So what I did was afterwards, I did a one-man meeting where I kind of repeated it. So if you go in to see yourself asking me questions, you won't. You'll just see me.
Okay.
Going over chapter 4, okay? All right, we'll let you go, okay?
Okay, thank you. Can we still get an email, these questions?
Yeah, I'll send you these 2 tests, and you guys can do whatever you like with them, okay?
Okay.
I'd appreciate that too, yeah.
But give me a chance, give me a couple hours to kind of proofread it though. I don't want to send it out and look like an idiot, because we found a couple of mistakes here, okay?
Okay.
All right, well, you have a good weekend, everybody.
Thank you so much.
You're welcome.
Bye-bye.
Give me the friendly raccoon wave.
Mm.
There we go. Got the wave. Bye-bye.